Assalamualaikum. 4.1 Capital Structure Cause of Financial Distress. Financial distress cause. Firstly, financial distress refers to a condition in which a company cannot meet or has a difficulty in terms of paying its financial obligation to its creditors due to high fixed costs, liquid assets, or revenues sensitive to economic downturns. Second, in finance, consider a company to be a financial distress when it is having difficulty making payment to creditors. Financial distress may lead to bankruptcy. The more debt a company uses to finance its operation, the more it is a risk of experiencing financial distress. Okay. There are several costs associated with financial distress, including bankruptcy costs, distressed asset sales, a higher cost of capital, indirect costs, and conflict of interest. Okay, last point, the other costs related to financial distress, such as high expensive financing, opportunity cost of project, and less productive employees. Employees of a distressed firm usually have a lower moral and higher stress caused by the increased chance of bankruptcy, which could force them out of their jobs. Signs of financial distress. There are several signs of financial distress. First, poor profits indicates a company is not experiencing good financial health. Second, struggling to break even indicates a business cannot sustain itself from internal funds and needs to raise capital externally. This raises the company's business risk and lowers its creditworthiness with lenders, suppliers, inventors, and banks. Third, poor sales growth of decline indicates the market is not positively receiving a company's product or services based on its business model. Okay, the company offers poor quality in its product or services, and consumers start buying from competitors. Eventually, this will force a business to close its doors. Last, when debtors take too much time paying their debts to the company, meaning cash flow may be severely stretched and the business may not be able to pay its own liability. Reasons for business failure: obsolete product means the product is outdated. Lack of diversification means the product is not attractive. Inefficient management meaning it's a poor management. Company gearing policy refers to the debt to equity ratio. Higher debt leads to the business failure. Expansion policy, unreasonable policy for the expansion. Actions in financial distress: liquidation, reorganization, bankrupt, default, and insolvent, meaning stock-based and flow-based. So these have to be taken into consideration if the company want to overcome the financial distress.